as a consumer today trying to buy a home right now, one of the top things that would frustrate me is the lack of transparency with interest rates and trying to figure out if I'm getting a good deal in this historically high interest rate market. And because I think people have a ton of fears with running their credit because credit scores might drop or they don't want hundreds of people calling them to sell them on a home loan, I think it's important to show you, the consumer, how to shop for your home loan, how to know if you're getting a good deal, and what to do if you are getting hundreds of unsolicited calls and texts about your potential home purchase. Hi, for those of you who are new to the channel, my name is Lizy Hoeffer. I'm a residential loan officer at Cross Country Mortgage. I like to teach practical money tips so people can make smart money moves and smart home purchases. If you find the information valuable on this channel, I hope you'll share it with a friend, and don't forget to like, comment, and subscribe. All right, so let's jump into the topic, because I would say after what's my interest rate, what's my monthly payment, do you have to run my credit, is the top question that I get asked by consumers when I'm taking their loan application. And there's lots of reasons for this, but the number one has to do with the fact that many consumers monitor their credit using an Experian site or a MyFreeFICO or whatever's on their credit card, and inquiries have a significant impact on the credit score once they're pulled. In lending, we actually use what's called a Fair Isaac scoring system, and I've done a very extensive video on credit. If you guys want to check that out, I'm going to link it below. So basically, inquiries make up the lowest factor for impact on a credit score algorithm, which means that it's really minimal, if any at all. And most of the credit bureaus have come out and said that anywhere between 3 and 5 credit pulls within 45-day period will count as one. Now, there is some correlation with people who have 6 or more credit pools within a 12-month period. That is an indicator of financial distress and can lead to bankruptcy. And so that is the reason that inquiries do have an impact on score. And although I've rarely seen that people being diligent with shopping with their home loan will have a significant impact on their credit. I would beware of a salesperson who tells you not to shop your home loan because of credit inquiries. This has been a sales tactic in the past to prevent you from shopping and doing your due diligence. People are afraid that because if they get their credit run, that they're going to drop in a credit score, which will lead to a higher rate or higher mortgage insurance or a less attractive program. It's very, very rare that I see that an inquiry could make or break a loan application. And that's typically because there is some challenges on the credit report already. But rarely do I see credit inquiries have a meaningful impact on somebody's shopping unless it was already in question to begin with. So the second reason that people don't want to get their credit checked in a home loan process is because of the insane number of spam calls that people get when they are shopping for any type of thing like auto loan, credit card, mortgage. And that's because if you've ever had your credit run and they included your email address or your phone number, it exists within the Experian, TransUnion, and Equifax databases, and they are selling your information to businesses for the things that you are shopping for. So for home loans, they're selling your information to mortgage companies, to banks. For auto loans, same jam, credit cards, you name it. And there is legislation right now trying to make this illegal because it is insane now the interest rates are so high. I had a client call me and say, oh my God, I've gotten 200 spam calls in the last 48 hours. It is insane because the last thing that we would want to do is put you in that circumstance. So there are a couple of things that you can do as a consumer to protect yourself because this is super annoying. One is add yourself to the do not call registry. It's super important that you register and then accept their email. Otherwise, they don't enforce it. And then there is an opt-out screen that you can opt out of any kind of solicitation with the credit bureaus for 5 years. And those are the two things that you can do to protect yourself. They are going to be, I think, rolling out harder legislation for people that break those rules because it is so intrusive and annoying to a consumer who's just trying to make a purchase. So as a consumer, how do you know that you're getting a fair deal without ruining your credit score, without getting hundreds of spam calls? Well, it's going to require a little bit of homework from you if you aren't willing to get your credit checked and talk to a mortgage advisor. And the first things you're going to want to do is set up a budget and understand what amount of money you have for a down payment, monthly payment, and closing costs. And then you're going to want to look at the price point of houses. So if you're a first-time home buyer, your down payment's going to be anywhere between 3 and 5%. Closing costs will be around 2 to 3% of whatever your purchase price is. So that should give you a basic framework with coming up with your budget. And then you're going to want to talk to 3 reputable mortgage places, probably recommended by your real estate agent, by Yelp, a Google search of your area, and you're going to want to call in and give them your scenario. Now, for most home buyers, it's going to be FHA or conventional, but if you're a qualified veteran, you'll ask for VA financing, and if you're in a rural area, you'll ask for USDA, and you want to make sure to ask for any and all down payment assistance or grant programs. Now, a lot of them are contingent upon your income, so you will want to need to know that, but you'll ask and say, hey, what are your rates today for conventional loan with 5% with a credit score of approximately 720. I'm a first-time home buyer and I'm looking for any eligible products that will help me with that. Now, they're not going to be exact quotes, but it gives you a good idea of the range of where interest rates are. You can shop 3 to 5 reputable lenders, either recommended by your real estate agent or a quick Google search on Yelp, right? But you're going to get a good idea just by making calls of where the range of interest rates are. Now, not every lender is going to be the cheapest, and the cheapest quote isn't always the best quote. You want to go with the person who really understands and can maximize your cash flow. I would recommend going with the person that explains the process the best and understands your goals the best. Another really great resource to help you figure out where the market is to go to a place like Mortgage News Daily. This is a subscription service that a lot of loan officers subscribe to that has where mortgage interest rates are. And it's important for you because it gives you an idea of where interest rates should be. They do a whole survey of nationwide lenders, and that's how they put out their interest rates. Freddie Mac also puts out a historical rate sheet, but it is 1 week lagging. And in this market right now, a week can really matter. Honestly, hours can matter. And so my last point is you are going to want to make sure to shop at least on the same day, if not within the same 2 hours, because the market can move even 0.5% in one whole day because we don't have a lot of market data that's stabilizing the market. The last thing I'm going to say is I would be weary of going on places like Bankrate, NerdWallet, anything that has a whole bunch of interest rates that you can see that have they look like a bunch of advertisements. Anytime you click on those things, you get cookied, and those cookies are going to follow you around the internet. And that's another way that people spam you for information and text you and call you. A lot of times those are their best case scenario rates, and there's a lot of disclaimers in terms of fees. And so they get you to call them because the rates are super low. And then when you qualify with them and send them a whole boatload of documentation, they tell you that the interest rate's actually higher and the process is a lot different. And so I would be wary of sites like that because they are made primarily for advertisement, and a lot of banks pay to be there and they aren't necessarily what they seem to be. So the last thing I'm going to say is that if you're looking for current market information but really feel overwhelmed with doing the research yourself, I put out a lot of really great content on Instagram just with short market updates and where I think interest rates are going, at least for the day or so. I also write a weekly newsletter that kind of talks about the market, and my team would always be honored to help walk you through your budget and walk you through a mortgage quote. We firmly believe in providing at least 3 different scenarios per qualification because the side-by-side is really where you see the differences in loan programs. And every single one of our consultations walks you through the start and finish and even post-close of your mortgage. And so we would be honored to help you. If you would like any more information, I will have all of those links below. Anyway, thank you guys for tuning in. Don't forget to like, comment, and subscribe.